Okay, we're going to talk about tracking revenue. This is another major process within the QuickBooks system. Fairly straightforward and easy, but a necessary part to understand and grasp. So let's begin. We're going to cover a number of items. So at the end of the day, you will have gained knowledge of processing customer returns and credits, writing off customer invoices, bad debts particularly, create batch invoices, print customer statements, assess finance charges, and create sales reports. And those are the reports that you're going to look at to see all your transactions for a particular company and job. So first, let's get started. Recording customer returns. You're going to use a credit memo function within the sales to create these cancellations or return merchandise or refunding the customer. So, and to do that in the customer menu, or you could go right directly into the customer center. Either way works. Works, and you create credit memo / refunds. And this is just what visually what it looks like when you want to create the customer credit. And what you see in front of you is circle is open invoices. And if you want to create a credit against a specific invoice, what we've highlighted here is just showing you how you can credit that particular invoice. And you can access it through Customer Center, which I've mentioned before. Now, one thing to note, QuickBooks does not automatically apply a credit to an invoice. You have to do that. You can do a number of ways. Apply through a payment, apply through a credit memo, or apply from an invoice. Now the first one here in the payments window, this is one way that you can apply a credit memo using the receive payments window. At the bottom of the screen you see right here it says discounts and credits. This is where you can take your charge that you've invoiced a particular customer and then directly offset it with a credit. Sometimes a credit could offset it completely or partially. You have to be certain that you enter the customer job and you have to select the invoice. And you select it just by clicking onto it and a check mark would appear. And then going down to the discount button and then selecting the credit memo. Now, in a credit memo, then you would want to go to this area here to tell it what you want to do. Now, you can obviously give them a check or reverse the credit card charge if you want to do it that way. But if they have an outstanding invoice, most individuals would rather you just apply to an open invoice and move on, in which case you would select apply the invoice. And at the bottom here, apply credits, and it will apply the credit to that particular invoice and essentially offset it. Now again, you have to select the credits that apply and you go forward from there. And it's pretty straightforward there. Let's take a look. Now, what if you want to refund a customer? And you can do that even if the customer has an outstanding invoice. They return their merchandise or their services was not good, or make a mistake and overpay. And those are the circumstances. If the customer wants to be paid with a cash or check, you just issue a check. If the customer is paid with a credit card, you credit or reverse the credit card charge. So if they were receiving a check, in the credit memo, you will create a credit memo, and then at the end it will say the credit memo or refund has a remaining balance that you may use. You have options. Retain as a available credit, issue a refund, or apply to an invoice. And we just talked about apply to an invoice. Right now we're talking about issuing a refund. If you click on issue a refund, this box will come up. The amount will come up, the amount that you want to pay, etc., etc. And then you can apply to a particular class and then submit information as a memo. Now, what if you want to write off a bad debt? You paid, you provided a service, for some reason they decide not to pay it. It goes through the collection process, and obviously you're not going to get the money because the company filed bankruptcy, so you have to write it off. And here is a case where you'll have to write it off. Now in here, if you see, instead of it being written off against the original revenue account, it's going directly to a bad debt expense. This is the proper accounting for it, because you want to also state how much you received in revenues or how much you generated in revenues, but what you want to make clear is anything that you have to write off, you want it to go to the appropriate expense account. And this is just one of those accounting things that's behind the scenes that you just need to be aware of. This is why we're putting it into an expense account versus reversing the original entry, because we are officially writing off a bad debt. We're not reversing a charge, we're writing it off. And it needs to be clear in our accounting records, so this is the audit trail that you'll be generating. Batch invoices is just a way of creating a set of invoices for a group of customers all at once. And you can create customer statements as well. And again, creating customer statements on a monthly basis and comparing them to, and that's your audit trail. It's a good way to track and to assess finance charges and just be aware of your collection process. Ensure that customers are paying on time, and the ones who are not, making phone calls to get your collection activity back on current. But if you have invoices that have yet been paid and they are officially outstanding, you can, in your preferences, have the system assess finance charges after a certain amount of dates. If you look at the screen in the preferences, you're going to go to edit and go to preferences, clicking under finance charges. You can say what the interest rate is, what the minimum dollar amount is, and the grace period, if there is any. You can tell it what account number to go into the expense account or revenue account. And then you can say, tell QuickBooks how to assess it. At what point do they start calculating those charges? And then here is a report, a customer summary report. And again, the report functions within QuickBooks are fairly easy to generate, and they're wonderful because you are allowed to make this report, this very standard report, and customize it, include the changing the date range, changing some of the preferences, the things that you see on the screen you can change and modify. And if you like it and if you want to use that report, you can memorize it for future use. The reports also allow you to run them by item, and this is a good trail because it gives you the different items, and the reports gives you the date and the period. And again, these reports are very specific to the type of organization and what kind of detail they like to look at on a monthly, weekly basis, and how they're reviewing and tracking their invoices and their sales. So in summary, using in tracking our revenue, we can process returns and credits, we can write off our customer invoices, and we can create batch invoices. We print and customer statements, assess finance charges if necessary, and at the end of the month or end of the period, create sales reports. This is the end of our tracking revenue tutorial lecture. If you have any questions, again, by all means, submit all your questions in the Q&A section of the discussion board. Thank you for listening.